The time has come for us to look at the top growth ETFs in 2026, and these things have gone bonkers since our last update. In this video, we will stack up the best of the best in the growth ETF world. We will dive deeper into the data than any other series on the channel so that we can crown a 20-year total return champion. Last year, VGT took that honor, and we'll find out if it still has what it takes or if a new contender is ready to take the crown. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. If you enjoy this content, then dollar cost average into that like button, subscribe if you haven't already, and consider joining the channel membership. It helps keep this section short and sweet. But in this one, I have one thing I have to tell you about before I dive in. Seeking Alpha is running that annual summer sale that I've been alluding to in my last few videos when I told you not to use my links quite yet. Now with the sale live, it's the perfect time. And you can try this for absolutely free using my link in the pinned comment. If you like what you see, you'll save $75 off your first year. It's usually $300, and right now it's $225. So that is a fantastic deal. You know what time it is. Let's grow. Portfolio perspective. As I'm sure many of you out there are well aware of, growth ETFs have gone even more hyperbolic since our last update. The run they have been on is wild, and even the pullback we saw in the last few weeks as I record this looks tiny when we zoom out. Growth has continued to crush value, and it is not even ballpark close. But we cannot build a future portfolio by staring at past returns alone. And yes, past performance really does matter because it shows us how different investments behave across many market cycles. It gives us a sense of how growth reacts in good times and bad times. But now more than ever, I think it's even more important to keep a balanced portfolio. I prefer a mix of growth and value, as many of you know, in any and all market conditions. If we strictly chase the winners that have been soaring over the past decade, we will get smoked by the reversion to the mean eventually. This is why I always zoom out, and I mean way out. A century of market history keeps us from buying high and selling low well lined up with all the other lemmings. With all that said, for the rest of this video, we will be strictly focused on the growth side of things. So buckle up because this thing is about to soar to the sky at very uncomfortable speeds. Growth ETFs. I think a growth tilt makes sense, especially for younger investors with many decades ahead of them in the accumulation phase of investing. Growth will fall hard when it falls, but it has a long history of snapping back stronger than before. And for you younger investors out there in your teens and 20s and 30s, those crashes are not a setback, they're a gift. Every contribution that you make will buy more shares when the market is beat up. And that really is how long-term wealth is built. Let me drive this home by showing how my favorite multi-sector growth index, the NASDAQ 100, has dominated the performance of the S&P 500 for 4 decades and running for those of us that stay the course during the bad times. This is the spreadsheet I use to track the history of the NASDAQ 100, as you can see here in the pink color, versus the S&P 500, and you can see that here in the blue. So the NASDAQ 100's inception was late 1985, and I just started with the first complete year of data, and that was 1986. And we completed, as we scroll down here in 2025, we just completed our first 40 years. So we have exactly 4 decades now at this point. And this is through the end of last year. The NASDAQ is even more ahead of the S&P 500 so far through 2026, but I only add these one at a time because this is the chill and zoom out version. What we're doing right here is we're starting a portfolio with $10,000 in the NASDAQ versus $10,000 in the S&P 500. And we're contributing $500 a month or $6,000 annually. So with a monthly contribution of $500 and starting at $10K, a very realistic scenario that most any serious investor can do once they they get going in their career. You could see the S&P 500 dominated the first year. So this difference is from the perspective of the NASDAQ 100. It only grew to 10.6K to the S&P's 11.9K. And you can see VU was ahead at this point by $1,100. And what I'm going to do here, just to make this easier to see, and we won't go through all of them, but I'm just going to hide these so we're just looking at the year-end balances. And you can see as we scroll down the years, there are some rough ones for the NASDAQ. Look at the .com. Boom. Ouch. Stay the course. 2008. Ooh, that hurt. Stay the course. Chill, 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 chill. And all of a sudden you end with 11.6 million with the NASDAQ compared to 4.1 million of the S&P 500. So with 40 years of $500 a month starting at 10,000, you would have almost $7,500,000 more with dollar cost averaging into the NASDAQ compared to the S&P 500. It's just funny because if you look at some individual years, an investor might say, that's why I don't do growth. See, it crashes just like that. And you know what? They probably shouldn't do growth. That is dangerous if you're going to jump in and out with any sort of panic. But if you stay the course, growth is pretty juicy. My only point of this section of the video is to never panic sell your growth positions when the market crashes. Our human emotions will naturally want to protect us by ultimately selling low and buying high in these stressful situations. Stay the course and keep on buying when the masses are running for the hills after a market downturn. The ETFs in this next section will produce stellar results over many years with the proper temperament. The best growth ETFs. I don't update this series very often, so prepare for a painful level of detail. Without further ado, let's crown a king. And to do so, we will be out on my ETF compare spreadsheet. And this one, like all the other spreadsheets that I show on this channel, is linked in the description below. There's a free copy of Excel and Google Sheets for this. So you can take a look at this. This is just one tab, the growth tab, out of many tabs that I use to compare my favorite ETFs. We're going to live here, and I understand you can't see everything yet. We'll get to the good stuff. I just zoomed it in so everything's not so small on your end. And I sorted these now by alphabetical order. These are the tickers of my favorite growth ETFs or growth ETFs like QTUM, MGK, SOXX, SPOMO, VONG. These are some of your recommendations over the years. So feel free to let me know what you got in the comments. Just make sure that I'm not already following that index. What I did, and I actually just added this column. I used to have to explain it, and it got painful because I can't memorize everything. I don't know all these like the back of my hand. What's that? And I finally just made a new column that showed the technology percentage. So anything that's orange you can see is almost entirely tech, particularly semiconductor indices and technology ones like VGT and XLK. And then IYW, I'm always surprised that it's only 83% tech. The lighter yellow ones here, you can see a lot of them are around 50%. Some of my favorites are SCHG and where are you? QQQ, and it's 46 and 59. Wow, that's a big discrepancy compared to usual. But here's the index name for each one, and I promise I won't read all these out, don't worry. I know you don't have that much time to be bored. And then the assets under management. Is this going to work for us? It is, and you can see VU is almost at that 1 trillion now, and QQQ of the growth indexes is the biggest at almost $500 million. VUG is over 200, and then VGT and its older brother XLK, both well over 100 billion. And then SMH, all you SMH people out there, this thing has boomed. Well, and a lot of that's returns, we'll get into that, is up to 68 billion. SCHG's really grown. Last year it was under 40. And then you can go down the list and look at your favorites, and some of them are a little newer or less known, and they're down here, like QTUM, for example. And then the amount of holdings is always nice. I think just as important, the top 10% to see how top heavy they are. Things like VGT and XLK are pretty top heavy. I'm actually really surprised to see VUG even more top heavy. I was not aware of that. Whereas QQQM and SCHG 4 growth ETFs are a little less. Oh, and SPOMO's right in there too for all you SPMO fans. But you can see that VU is much lower as a balanced ETF, not a growth ETF. So I always have it here for context. That's why it's yellow though. Doesn't count for this video, but it's always nice to see compared to the market. So what we're going to do real quickly, actually, expense ratio is important. So of the growth ETFs, VUG and SCHG and MGK are the best, but you can see we have a lot of them. I mean, from VGT up, we're under 10 basis points. So you're sniffing free at this point. Then you have some solid guys here. I'd say 0.2 and down is okay. Really, when you get, I know it doesn't sound like much, but 0.34 all the way up to 40 basis points, that adds up over decades. Now, again, a lot of these names are killing it. Don't get me wrong, but the expense ratios, they really do add up. There's lots of examples where this ends up being 6, sometimes even 7 figures. And as absurd as that sounds, you'll just have to take my word for it. But of course, the lower the better here. And you see our champions up here. SCHG has always been one of my favorite low cost ones. Okay, I've now collapsed into the data we'll actually care about, got rid of all the names and everything, and we'll sort by each one. Now, we don't really care much for yield, of course, with growths. I mean, the market itself is all the way down to 1.05, which is wild. That's very low. Things are, I don't want to say overvalued, but things are very highly valued right now. So we'll see where the future takes us. And then you can see that we have anywhere from 3/4 of a basis point all the way down to like 0.11%. We're not here for dividends. It's cool when the dividends grow, but again, this doesn't really move the needle for growth. Wow, I will say though, QTUM is really growing those dividends. The 3 and 5 year CAGR stand out. Same with SCHG. That's interesting to see. But again, we're growing a dividend that's so small it barely moves the needle. So let's start moving that needle. We're talking growth ETFs, and of course, we want to start with performance. Now, starting out here with the least important performance metric, year-to-date performance. We have SOXX actually smacking its semiconductor friend SMH. That's interesting. 87% to 64. And then QTUM is also a subsector specialist like these ones. It's up there at 41. Of the ones, I don't want to say that count, but a little more broad, either all tech or a lot of tech or multi-sector, XLK seems to be winning this year so far at 26%. And then you have SPMO, a very solid 24%, so it's right there. And then MyBay, VGT has had a solid year at 22, and we won't read all these. We're some of our favorites. QQQ, a little lagging here at 15. And I don't use QQQM because it doesn't have enough history. I'm sure most people out there watching know this, but QQQ is the one I have to use for all these data polls. They trolling me? There's no way SCHG is 2.8%. Hold on, I have to check this real quick. I'll be right back. I'm back. I did go look it up. This is just year-to-date performance. It does not include dividends, but that's fairly accurate. The numbers are a little different in Seeking Alpha because I'm doing this here on 610, and it's not the exact same timeframes, but SCHG has been massively struggling by comparison to VGT, my growth of choice, by almost 20%. That's wild. But let's start zooming out here. On the 1-year performance, we have SOXX just smashing it at 153, SMH at 130, and semis are crazy. QTUM there at 74. XLK, our first one that I would actually own, not just a subsector, is at 51. And IGM, okay, 47. ICU and IYW, it's always producing, man. It's like 38 basis points expense ratio. I don't care, I'm still great. 47, and then VGT there at 46. I like to look QQQM down there at 33, and SCHG at 19. That is mind-boggling. When in doubt, zoom out. Let's unfog that brain. You can see that SMH does beat its competition SOXX. 308 to 253. That's such a high CAGR. That's so ridiculous. QTUM here at 220. And SPOMO, and people got mad at me in the comments, SPMO. I'm not going to say that over and over. SPOMO up there at 175%. Love that. IGM, which is also extremely tech heavy, but still a very solid 151. And then we have our tech friends here. IYW leading the way for the second year in a row on these time frames. But now I'm out here on the 5-year, and SMH is still leading the way. 309 for SOXX and QTUM, those ones are still incredible. SPMO 182. So in the last 5 years, it is beating my favorites, these tech guys, and I'll go specific, my favorite, VGT 153. So it's doing a great job with that momentum strategy. You know, not for me, but I'm not saying it's bad. It's been interesting. Momentum historically can have some funky implications though in certain market types. It's never been my favorite factor within quote unquote style or factor investing. QQQ at a very solid 117. And I should note all these are smashing the market, which is down here at 88. But now we're getting to what we really care about. And QTUM does not have 10 years. That's why it's NA. Oh my gosh. SMH is at 2200%. That is unreasonable. 1831 for SOXX. And IYW is still ahead of VGT in the last 10 years. That's interesting because we will be taking a look at the last 20 years here in a minute. And VGT has just the lead over its older tech brother, 812 to 810. These are all incredibly high, by the way. QQQM leading in what I dub the multi-sector, I say that in quotes, tech ETFs over the last 10 years at 590. SPOMO still very solid at 535. Where's our friend SCHG? Down there at 436, but that's not bad. You can see the market's at an incredibly high, believe it or not, compared to the 100-year average of 312% in the last 10 years. But 312% falls just shy of 2,183%. But now let's get to the fun stuff, seeking alpha. We need to crown a king. Okay, I am excited to see this because I mentioned this in a lot of my videos, but genuinely, all screen shares that I do are 100% live. I never do a mock run through. And wow. You can see SCHG here year to date. That's crazy. For example, I'm blown away by how poorly it's done this year. I did not know that. So these videos help me as well. And I have QQQM pulled up here in Seeking Alpha. You can ignore that. It's just, it's the last ticker I was looking at. So I had to do this. I can only fit so many on the screen. So don't throw tomatoes at me. I go by the highest AUM, assets under management, and some of my favorites. And these happen to be the highest AUM, like in order. They're not in order here, but we have VGT and XLK for tech bros, 100% tech indices. And VGT pulls in like 300 plus companies and XLK is only 70 something, I think. So they're slightly different. This has small and mid. But as a tech bull, these are my favorite two tech ETFs. And then we have SMH, I think the best semiconductor ETF, and that's a popular one now. And then all my favorite multi-sector growth ETFs, QQQ, SCHG, and VUG. And I will, as some of these are too young to look back further, I will add in some of your favorites if they have the history. For example, when we zoom out 20 years to crown a king, SCHG and SMH do not have 20 years of history, so I have to X out of them here soon. And I'll add in probably IYW and I'll look for another one. Anyway, here on year to date, we see that tech ETFs are doing very well here. Oh, sorry, I missed SMH. So it's up 80%. That's ridiculous. And then VGT is falling short of its competition by about 5%. So bigger tech is winning so far, but they're both crushing the multi-sector ones, where QQQ is absolutely dominating, like I haven't seen in a while, over SCHG. These are the two I watch versus each other oftentimes, and then these are the two I've watched a lot over the years. But 21% for QQQ to 5% for SCHG. And VUG is SCHG-like in its trends, and you can see that it's up a measly 8%. I think VU itself is up at least 10% or so. Now, zooming it out a year, wow, these are big numbers. You can see SMH is up a ridiculous 146%. And second place, once again, is XLK at 59. VGT, they're at 53. Still legging its big brother by about 5%. And QQQ is still dominating SCHG and VUG. Over the past 3 years, this is going to be interesting. Wow. SMH just continues to impress. I hope those people that saw some big downturns in SMH, because it has happened recently on certain days, held and stayed the course. Because if you did, I just want to say congratulations. SMH is up 324%. But second place out of the mortals, like not counting SMH here, is once again XLK at 124% to VGT's 122, getting a little closer there on the tech competition. And then likewise, QQQ is up 105 and VUG at 90 and SCHG at 86. Getting a little better over 3. As we zoom out 5 years, we have more of the same. SMH is just breaking the charts and is completely unreasonable at 428%. VGT is actually lagging XLK, very interesting, by quite a bit, 19%. 160 for VGT and 179 for XLK. And then QQQ is still dominating SCHG and VUG for the multi-sector crown at 124 to 99 to 96 respectively. Now we're going out 10 years. And by the way, this is not our biggest zoom out, so stay tuned. SMH is up an unreasonable 2,368%. VGT did take the slight lead over XLK, basically tied though, 908 to 903. Oh wow. Running laps around its competition at 660 to 470 of SCHG and a lagging 445 of VUG. But now, my friends, and I'll need a minute here, you won't have to see all this, I'm going to get rid of, unfortunately, SMH doesn't have the data, and SCHG could not go back the full 20 either. Before I jump back 20, I actually did 15 years. I'm from 6/15/2011. For some reason, the pop-up isn't working, but it is 6/15/2011. And you can see in that time, XLK. Oh, and I had to drop SMH. Unfortunately, it only had about 14-ish years, it looked like. I mean, it would have won clearly, as we saw. But XLK is the champion here at 1,729 to VGT's 1,697. XLK eked it out. And then the NASDAQ 100 at a very solid 1,410, smashing SCHG, which has been around in this frame, at 899 and VUG at 858. Okay, I'm back and I have 20 years of data in, and I did add IYW because it does have the age. And I can't get that pop-up. For some reason, it's not working. Here, I want to prove to you. Okay, right here. 6/15/2006 through 6/15, that's today, 2026. So this is the 20 years. This pop-up's broken. It's going away real fast. But all these ETFs do have the duration. And I added in SPY, again, VU is not old enough, as the market, because none of the other growth ones have the years, so I might as well show us something exciting here. And I tried to put them in the order, by the way, before looking of their performance. Oh, I got it. I didn't know about these ones. Got it. Yeah, I got it right. So anyway, it looks like VGT for the second year in a row in this video series is the 20-year king at 2,346%. XLK is at 2,291%. That's pretty close over the years. And IYW is right behind it at 2,282. There's that expense ratio. It could have beat them, but that's still very impressive because expense ratios are included in total return, by the way. QQQ, by far and away the best multi-sector over the last 20 years that I know of, at 2,101%, crushing VUG, 1,102%. And then the market, the S&P 500, seemingly leggy, but in reality really solid, 759% during this time period. So you can see growth has just crushed the market over 20 years, and particularly tech. The only requirement with holding these, once again, is please don't panic and hold them for the long run, because you can see on the chart there, I can't move my mouse to it because I'm hovering, there are some big dips sometimes, and you just got to roll with the punches, and they bounce back, and they bounce back strong. My favorite ETF, VGT, does it again. And as a tech bull, I'm not surprised at all that this one went back to back. The rest of 2026. Growth has been soaring, but I plan to stay true to my balanced portfolio. And I still love VGT as my primary growth position. But for those of you out there that are a little less tech bully than me, that want something with multi-sectors in the growth realm, I highly recommend QQQM, the NASDAQ 100 ETF. And then I add VU as my cornerstone, and SCHG is still my value ETF of choice. This mix has been an amazing combination for me for over a decade. And my new contributions always buy the most beat up of my positions to keep them at those target allocations to slurp up that juicy comparative dip within my system of high quality ETFs. But enough about me. I want to hear what your growth ETF of choice is. Drop it like it's hot in the comments. And speaking of hotties, I want to give a huge shout out to my incredible channel members. We are now 40 strong, which is great. And a special shout out in this one to my new channel member, Arminda. I appreciate you joining the channel membership. It means a lot. And of course, as always, I appreciate all these wonderful people whose names are on the screen right now. You are genuinely, I can't stress it enough, making this possible for me. My camera just died because the temperature is too hot in here, and that's probably why you've noticed me sweating in this one maybe. But a real quick shout out once again to that Seeking Alpha sale. Hit it up if you've been looking, try it for free still. And same concept with Snowball Analytics if you're interested in tracking your individual stocks. I use and love both of them. And as always, check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.